Good morning, ladies and gentlemen. Welcome to Crest, where we focus on fundamentals as a directional driver and the technicals for our timing of entries and all that. Last week was kind of a turbulent week, which we are still in some positions of last week. The dollar, China, okay, and Euro, Aussie, which I'm still looking to short, but the driver is not enough to push the market as expected. Regardless, still looking at my positions. Aussie gave a dovish stance, a very dovish statement last week, but the reason why I'm shorting is due to the fact that the euro cut their interest rate, and it was a dovish cut. The Swiss franc also had a dovish cut. The card had a dovish cut too, which, as earlier said, I still have them on my negative end of the spectrum. Aussie, now I'm neutral on the guy because of the dovish stance by the Federal by their central bank, and then dollar is still bullish. I'm very bullish on the dollar. So what is anticipated for this week is that they are going to be the Jerome Powell, the FOMC, is going to cut by 25 basis points. But now that is going to be a hawkish cut. It's going to be a hawkish cut. So if that's going to be a hawkish cut, then we are still bullish on the dollar. And for this week, we have the GBP Clement change, the CPI for card, which is not really going to move the market that much, and we have the the BOJ. So the interest rate, they are looking to their policy rates. They are looking to still hold, but should they hold and give us a hawkish tone in the statement, that's going to be yen strength. And for that reason, I'll be looking to short pairs like the Swiss yen, because this is where I was looking out for a short, looking at shorting it here when it gets higher here, because this was my first entry and it came down. I'm looking to re-enter. For that reason, if you're still looking at dollar strength, if you look at Aussie, it's still a short bias, still going down, but I don't like the price action. I don't like the price action at all. If you look at it from a D1 stance, so this candle here reacted from this D1 drop base drop. So I believe price is going to go back up here before dropping. On the 4 hours, we can take a look at that, and this did not close below this area. So the potential of price coming back here is still there and taking it as liquidity. So because what we do have is, this is our lower high. These are lower low. So if this is a lower low, we're expecting a lower high. There is this imbalance here. Probably this market might do this. And for that, this Euro AUD, I wouldn't say anyone should look for shorts on this guy, but you could look for longs on the NZD pound. You could look for opportunity for longs on the pound card. Remember the pound is still holding their interest rate, so yes, they're still hawkish. So look at this rejection candle. So a lot of people will be looking to short this guy. And on the daily time frame, what we do have is our demand here. So this is where I'm expecting the market to react from and then push to the upside. That's for pound card. For pound Swiss, it's equivalently the same. Now there's this rejection here. This was a rejection here, but now this is our demand. If we look at this market structure, this is our breakout structure, higher high, this is our higher low. and this is internal H4 market structure. So this is what you're looking for. These points, this D1 demand gas has to be taken out, and then we can look at taking that price to the upside. So if you look at it from your 4 hours time frame, this is a 4 hours demand, so you could just take this zone this way, and it should give you a good risk to reward of 1:2 points. Yes, this is a good risk to reward. So this is a pay. The reason why we're looking at this short, this longs, is because the Swiss, they did not just cut the interest rate last week by 25, they cut by 50, more than the market had expected. So that's the bearish cut, and the tone talking about inflation has gone so much below what they expected, so they're looking for inflation to start climbing to the upside. And they also cut because the Swiss yen is, the Swiss is very strong, so the Swiss is too strong for their exports, so it's killing their exports. That's why I'm looking for these shorts, these longs. And then we look at the pound NZD. It's because of this market structure is very beautiful. Now NZD, they cut the interest rate last week, and then the pound are still going to hold this week. They are not going to cut because they already made that clear. So this is our demand. I'm looking out for that. So this is our higher high, this is our higher low, this is our higher high, this is a higher high on the daily time frame. 4 hours time frame is telling us. So we took these very beautiful longs last week, these very beautiful longs, all this. So this week this pullback is to continue to the upside. That's the idea. And then we have the NZD yen. Looking at the points, we could have a short opportunity if the Bank of Japan gives us a bullish hold, a very hawkish statement. So this might do this. So this is what I'm looking out for, or probably the market reacts directly from this point to the downside, or they are still in their ultra loose policy, which doesn't make any sense to me. I think they're supposed to hike, but they're still holding it. Now we're looking at the USD card. That NZD yen is just one of the trades on the board. The USD card on this time frame, this is the weekly bullish leg, as we can see. So the 4 hours, this is where I'm expecting to long it. So I'm looking to long this guy to the upside. Last week this was a good longs for me. I had this H1 demand there, and then this the USD Swiss. So this is, I'm expecting the markets to react. So looking at the 4 weekly time frame, I said earlier this guy did not close below, so the potential of this guy going to the upside and this take out this is still on the table. If we put in, look at this, this is a liquidity. That's a liquidity, so it has to be taken out. And if we look at it fundamentally, the dollar is still bullish. They are not looking to cut, and the Swiss has been cutting, and they even gave us a very hawkish, a bearish tone last week. So for that reason, this is a weekly time frame. We're looking at a 1 month to 2 months movement. So potentially price might come. So our first target is this blue line, and looking at it from the daily time frame, what we do have is I expected price to come lower, but then this demand had to hold price. So what the market might do is, let me delete everything. What the market might do is, it's because this is an internal bullish leg on this time frame, so the 1 hour and the 4 hours, we might be seeing movement to the upside. So the first target is this point. Then there is this imbalance here, which I expect the market to react from. So this is a supply zone. I expect the market to react probably from there. There might be some negative news on the dollar, react from, they come back to this particular demand, then we can continue to the upside. So this would be a very high probability long opportunity. Now a lot of people would think that there's a breakout structure to the downside, but price will actually continue to the upside. And on the 4 hours, what we do have is, this is a breakout structure. So this is our last low. This is the imbalance. Okay, so this, you need confirmation here on a lower time frame. Let me clear everything. You need confirmation on the lower time frame here. So this is the 4 hours demand. You need your M15 breakout structure to take that position. But if you can wait patiently, this is the highest probability area. And looking at it from the daily time frame, this is a D1 demand, which is very, very okay. I believe the market is could just move all the way from that end, give us a fake as though it's going to go to the upside, then it drops. So what we would like to see is using we need to use lower risk. So we might see a breakout structure, but then it comes down here before going to the upside. So this is a high probability setup. Okay, so for gold, what I'm looking out for, I'm still expecting gold to drop to the downside. So this was my view on gold, but it had to come to this supply. The same thing goes for the silver, so I'm expecting silver to drop. Looking at this market structure, this is a breakout structure, so this is a higher high. This is a lower time frame breakout structure, so this is gonna be lower low, this is lower high. So before market does this, so this is the internal bearish leg, and for that's over. This is gold China. I'm still expecting this to continue to the upside. Let's have a good trading week.